Hello everyone, how are you? Welcome to another session of the Financial Management Revision for CA Intermediate November 2023 attempt. Welcome to KSJ Teaching. I'm your friend, your mentor CS Saurabh Jindal, joining you in this journey of your preparation for November 23 attempt. Okay, so in the last lecture, we started with the revision of working capital management. In the last lecture, we discussed about what is working capital. Then we discussed about why there is a need for the working capital due to the existence of the operating cycle. Now, another very important topic coming up for this one. This is a very important lecture. Do watch the video till the end. And first of all, hit the like button, share with all your friends. And if you have not yet subscribed to the channel, the biggest mistake you are committing. Okay, so you should avoid the mistakes, whether it is the life mistakes or the exam mistakes. So the topic that is coming up is the estimation of working capital, the most important topic from the examination point of view, and we are going to go into the details of the each and every item, that how the calculations are to be done. Okay, so let's start with it. That is, the topic is estimation of, write down the estimation of working capital. Now, one thing we have understood in the previous lectures, that's a working capital is the amount that we require for our day-to-day expenses. The second thing that we understood, that it is required during the period of operating cycle, that is the amount we have invested from our pocket, right? But it is yet to be recovered by the sale of the goods. Now, the estimation of working capital tells us what is the amount of working capital. We already understood why we need working capital. This topic tells us that what is exactly the amount that we should have as the working capital, because in the last lecture itself I told you that working capital should be just sufficient. It should neither be in the excess nor in the shortage. So we need to find out what is that sufficient working capital that should be there. Now this working capital, the estimation of working capital is dependent upon two things, right? One is the holding period. One is the holding period or the operating cycle. Why, sir? Because the working capital will be required for that much period only, right? If there is a raw material storage period of 2 months, the working capital related to raw material will be required only for 2 months only, right? It will be required for the operating cycle only, and the working capital will be required to the extent of, it will be required to the extent of amount invested during operating cycle, right? So it is dependent upon two things. One is the period. Second thing is what is the amount that is invested during that operating cycle, right? And to that extent only we need the working capital, right? So it is dependent upon two things. One is the period for which there is operating cycle, the period for which the amount is invested, and what is the amount of working capital that will be required. That depends upon what is the investment during that operating cycle. Very important thing, sir. These two are very important things, right? So this estimation of working capital, for this estimation of working capital, we need to estimate majorly two things. If I talk about estimation of working capital, it will include two things. One is the estimation of current assets. One is the estimation of current assets, and the second thing is, what is the second thing, sir? The second thing is estimation of current liabilities. Estimation of current liabilities, right? Please keep making these notes because these are going to help you in the revision just before the examination. One day that you will have in between the examination, all these notes are going to help you. Now, in the last lecture only we discussed that what is a working capital equation. The working capital equation says that current assets minus current liabilities, that if you have to pay 100 rupees to someone, you should have more than 100 rupees in your pocket, right? The excess money, what is left after paying off, is your working capital, which you can use for meeting your day-to-day expenses. So that means we need to find out that what should be the current assets, what are the current liabilities, and what is the net working capital available with us, right? And he says the most of the firms, what they do is after current asset and current liabilities, they keep something as safety margin. Well, sometimes they keep as some amount as safety margin, right? In case of any emergency, have a little bit of more of working capital than what is being calculated by assets and liabilities, right? So in the current assets, we are going to discuss about the various items. Under the current assets, we'll talk about one second. Under the current assets, we'll talk about inventory, right? Then we'll talk about debtors. Then we'll talk about then cash balance, right? And there can be prepaid expenses, right? Under the inventory can be divided into three parts, basically RM, WIP and FG, three types of inventory. Current liabilities, basically we are going to talk about two things. One is the creditors, basically two things. One is the creditors for raw material, right? And second will be the creditors for expenses, right? So these two things will be there. So all these items we need to discuss in detail. Let's start with the first item. First we'll start with the current assets, then we'll see what is the whole statement, right? Okay, so first we'll go through with the first part, that is the current assets, right? We'll start with the discussion on current assets, right, sir? And under current assets, the first point that we are going to discuss is the inventory, right? First, we are going to discuss about inventory, sir. Under the inventory, we are going to discuss first about the raw material, right? So the first thing that we are going to talk about is raw material, right, sir? Now, talking about the raw material, the first thing I told you that this working capital estimation is dependent upon the period, the holding period, and the amount invested during that holding period. Clear, sir? Okay. So what is the period here? The one thing that will be important here is the holding period, right? Holding period of raw material. We have just discussed in the last lecture how to calculate the holding period of raw material. Let's say the holding period is 2 months. Okay. This is just an hypothetical example. Second thing is, what is the amount invested? Amount invested will be, what will be the amount invested here? In case of raw material, that will be the price of raw material. That is the price of raw material, right? So how to calculate? Now, how to calculate what is the working capital requirement related to the raw material? One thing is clear, we need it according to the 2 months only, right? So write down a few things here. Write down a few things. Let's say this is the period of 1/4 to 31st of March, right? 31st of March. This is one full year, and during this period, you have decided to manufacture the finished goods. Let's say 12,000 units. Right? This is just a hypothetical example that we are taking for making you understand, right? What is the raw material required? He says 12,000 multiplied by 2.5. That is for every 1 unit of the finished product, you will require 2.5 units of the raw material. That is how much it is? 12,000 multiplied by 2.5. That comes to 30,000 units. 30,000 kg or 30,000 units. Now he says the per unit cost of the raw material is 4 rupees. So what is the RM cost? What is the RM cost? That is 30,000 multiplied by 4. That is 1,20,000. Clear, sir? Now, this 1,20,000 is the raw material cost for the whole year. This is for the whole year here, 1,20,000. What is the cost that is invested for the holding period? That is for 2 months. That will be the requirement of working capital for the raw material. So what I am saying is, I am saying that 12 months RM cost. What is your 12 months RM cost? That is 1,02,000. Yeah, now you need to find out what is the cost that is invested for the holding period. What is the holding period? That is 2 months. 2 months RM cost. How much it is? 1,20,000 into 2. That is 20,000 rupees. Yes, sir. Clear? Any doubts? So we need to find out what is the cost, what is the amount that is invested, the amount invested with the raw material consumption cost. How much of the raw material you are going to consume? Sir, 1,20,000 worth of raw material you are going to consume in a year. So in those 2 months, that is the holding period. What will be the cost that will be invested? Right? This is what? This is RM consumption. RM cost is related to RM consumption for a year. So what will be, this is the RM that you will be consuming in a year. So what will be the cost that will be invested for those 2 months? That will be 20,000. So what is the calculation for raw material here? What is the raw material calculation here? That is the annual cost of consumption of raw material, right, divided by 12 months multiplied by 2 months, right, or the holding period. I'll write it as not 2 months. 2 months can be flexible, divided by holding period of raw material. Holding period of raw material. Clear, sir? So this is the calculation regarding the raw material. Holding period will be given to you in the question, and we have written it in the months. It can be in the weeks. You can change it accordingly. If the holding period is given to you in the weeks, you can take here 52 weeks, right? If it is given in the days, you can take it as 360 or 365 days. So that depends upon the question, right? In the question, how the holding period is given to you. If it is given to you in the months, take it 12 months. If it is given to you in the weeks, take it 52 weeks. If it is given to you in the days, take it as 360 days. So that totally depends upon how it is given in the question, but you have to read the question very carefully for this thing. Do not commit a mistake in that case, right? So this is regarding the raw material. Clear, sir? Let's move on to the next item of the inventory itself. Under the inventory itself, the second item that we are going to discuss is regarding the WIP. Very, very important, sir. Sir, WIP is very, very important. Now, if the question says there is no WIP, there you will find some of the questions in the ICAI module also. There are a few questions which says there is no WIP. If there is no WIP, then you should thank the God. Thank you, God, there is no WIP, right? Okay, anyhow, jokes apart, but we need to understand what is the role of WIP and how the calculation is to be done regarding the WIP. Again, the one thing that it is dependent upon is the holding period, right? It is dependent upon what? It is dependent upon the holding period, sir. What is the holding period? The holding period, let's say, is 2 months. The holding period of what? Holding period of WIP, that is when the raw material is in the process of conversion to finished goods. It is in work in progress, right? And what is the amount invested now? What is the amount being invested here? What is the amount invested? So you need to remember, sir, two things, right? It is dependent upon two things. One, the holding period. Secondly, what is the amount that is invested? Sir, in the WIP, what is the amount that is invested? That is WIP cost, right? Now, what is this WIP cost? This WIP cost is the works cost, right? And what is this works cost, sir? The works cost is it is quite a possibility that in the examination this amount invested, it is given to you something else, so you have to calculate accordingly. They might say that WIP is to be valued at prime cost, right? So in that case you have to calculate on prime cost. If nothing is mentioned, then it is works cost. What is works cost now? The works cost is material, right? The works cost is material, labor, right, and overheads. Now, regarding the overheads also, otherwise in the works cost we take only the factory overheads, right? But here you might find some of the questions where they have taken the factory overheads also, the factory overheads, plus they have also taken the admin overheads which are related to production, not the general administration overheads, only the overheads which are related to the production, right? So this is broadly the works cost here. Now try to understand one thing regarding the WIP, which is the most important thing. I am saying the holding period is 2 months. So in those 2 months, let's say on 1st of April, the holding period is 1st of April, May and June, right? Till 30th of June. So this is the 2 months of the holding period of WIP, right? This is 2 months holding period, right? This is what is 2 months holding period of WIP. Right, sir. Now, let's say you want to make a shirt. When you want to make a shirt, when will you issue the raw material? Sir, this is quite a basic logic that the whole of raw material will be issued. In most of the cases, the raw material is issued in the beginning of the process. It is not that if you want to make a shirt and you require 3 meters for a shirt, 1 meter will be issued at the beginning and another 2 meters will be issued at the end. Is it quite a possibility? No, sir. Right? Obviously, sir, you need the whole of raw material in front of you. Is it a possibility that when you start studying, you enrolled in the CA course, some of the books you are ordering today, some of the books you will order after 6 months? No, sir. You need all the books in front of you. The whole of material should be there in front of you on the first date, right? Whenever you are planning to start with your preparations, the raw material should be there in front of you. Only then you will prepare your mind how to prepare. Then you will strategize, isn't it? So he says here on 1st of April, the raw material is 100% transferred to WIP. Transferred to WIP in the beginning. Now, what happens, sir? Regarding the labor and the overheads, what will happen? Sir, you have the books in front of you, but during the period of the study time, that is 8 to 9 months that you get from the time you register until the time your examinations are, you will incur the labor and overheads, right? The overheads cannot be, all the labor and overheads cannot be incurred on one date. All the labor and overheads cannot be incurred on this particular date. The labor and overheads will be incurred throughout the period, right? So what I'm saying is labor and overhead cost will be incurred, right, throughout the WIP period, right? And this might be written in the question as labor and overheads accrue evenly throughout the period. Now, this is the language that might be given in the question. So I have given you both the languages, right? So this is basically how to treat the material and labor and overhead cost in the WIP. How to calculate WIP, sir? How to calculate? Now this logic, I hope you must have understood it with your example. Whenever you are preparing for the examination, you need all the material upfront, right? At the very beginning of the start of the course, you need all the material, but labor and overhead, the hard work and the dedication, you will continue throughout the period till your examinations, right? The same thing, the same logic applies here, right? Now, the calculation of the WIP cost is dependent upon two things. Now, if I talk about the WIP cost here, the calculation of the WIP cost is dependent upon two things. One is the material cost. Second is the conversion cost. What is conversion cost, sir? We have already, I think, studied about it in the process costing, right? Conversion cost is nothing but the sum total of labor and overhead cost, right? The cost which is incurred for the conversion of raw material into finished goods, that is the labor and the overhead cost, right? Now, for the calculation, we need to first calculate what will be the material cost, what will be the conversion cost in case of WIP, because we need to find out what is the amount of investment. There will be two types of amount that will be invested. One is the material that is used in the WIP. One is what? One is the material that will be used in the WIP. Focus here. One is the material that is being used in the WIP. The second will be the labor and the overheads that will be incurred, that also you will incur from your pocket now, sir. That also will be the amount that will be invested in the WIP, right? But the difference here is, why, sir, can we calculate it in total? No, sir. You have to calculate it separately. How to calculate the material cost? Let's see how to calculate the material cost. The first we'll talk about the material cost. Again, the material cost is dependent upon the consumption of material during the year, how much of the material you are going to consume during the year. That is the annual consumption of raw material, right, divided by 12 months, that is in the whole year, multiplied by the holding period of WIP, multiplied by the holding period of. Now, here you have to be very careful with, do not confuse with the holding period of raw material. Here we have to take the holding period of WIP, because the holding period of raw material and holding period of WIP can be different. So I'm highlighting it, right? Multiplied by the degree of completion. Multiplied by the degree of completion, sir. Right now, what is degree of completion? Degree of completion says that whether this 100% of the raw material has been entered at the very beginning, or some part of the raw material is being entered, or 80% raw material has been transferred, rest is not transferred. That depends upon the question. Now, if the question is silent, I'll make you write after this, right? So what is the cost involved? Annual consumption of raw material divided by 12 months, multiplied by holding period of WIP, multiplied by degree of completion, right? Now regarding the conversion cost, right, conversion cost can be written separately also. You can also separately write labor cost and overheads, right? So I'll write here the annual cost of conversion, divided by 12 months, multiplied by holding period of WIP, multiplied by degree of completion, right? So again, holding period should be of the WIP, sir. Right now, sir, how to take degree of completion? There are two scenarios. One scenario is that degree of completion is given to you in the question, you have to take it accordingly. Right now, if the question is silent as to the degree of completion, write it down that if question is silent, as to degree of completion, then what to do, sir? For material you have to take it as 100%, and for labor and overheads you have to take the degree of completion as 50%, because, sir, labor and overheads accrue evenly throughout the period. So we take what is the average cost of labor and overheads that is incurred, right? So that is why we are taking it as 50% if the question is silent, right? So the whole scenario is regarding the WIP, that how you have to calculate the WIP. Let's write down a small example, right, which can help you in the understanding this better. Let's write down a small example. I say the budgeted production is equal to 60,000 units. Guys, if you have not yet liked the video, like kar do yaar fatafat se, right? You people have been giving the views, that's good. In the last video, you people have shown a good support, but please do like the video also, right? That is also a great motivation for us to keep going, right? Budgeted production, raw material cost is 5 rupees per unit. What is the labor cost? Labor cost is 4 rupees. This is everything is per unit, right? And overheads is, let's say, 2 rupees per unit. Then he says WIP holding period is 2 months. Now, how will you calculate the value of WIP here? How will you calculate the value of WIP? Very simple, sir. If you talk about the solution, the first thing that you have to calculate is what will be the material cost. What will be the material cost? That is dependent upon how much of the material you are going to consume in a year. On 60,000 units, 5 rupees per unit, on the assumption that for every 1 unit of the finished product, 1 unit of the raw material is going to get consumed, right? So 60,000 multiplied by 5. This is the whole year for 2 months, right? That is the WIP holding period, and degree of completion is 100% because nothing is mentioned, sir. That comes to 50,000 rupees. Now, what about the labor, sir? What about the labor? The labor will be 60,000 multiplied by 4 divided. Now, 4 rupees will be the total cost. 4 rupees will be the cost of the whole year, right? Multiplied by 2, multiplied by degree of completion to be taken as 50%, sir, right? 12 multiplied by 2 divided by 2, that comes to 20,000 rupees. Similarly, we'll calculate it for overheads. Now, what will be the overheads, sir? 60,000 multiplied by 2 divided by 12 multiplied by 2 multiplied by degree of completion. You have to take it as 50%. This will come to 10,000. So, this will be the total amount that is invested in the WIP for which we require the working capital, that is 80,000, right? So this is the total amount invested in WIP. Clear, sir? So very simple. The estimation is based on two things. One, the holding period. Secondly, what is the amount that is invested during that holding period. So in the WIP, we have calculated it like this. I hope this much is clear, sir. The WIP is very, very important because this is one area where the people get confused and a lot of mistakes are committed in the WIP part. Coming to the finished goods. The third element under the inventory itself is finished goods. Right? Under the inventory itself is finished goods. Now, again, dependent upon the holding period, that is 2 months. And what is the amount that is invested? If we talk about the amount that is invested that is the cost of production, cost of goods produced or cost of production, or sometimes it also might take the cost of goods sold. Cost of goods sold, right? So this is how holding period is 2 months. What is the amount of investment, cost of production or cost of goods sold, sir? Which amount is to be taken, whether cost of production or whether cost of goods sold, I'll discuss in the later part. After this only we are going to discuss. The first we'll say what is the stock of FG, what is the amount of FG, sir? Stock will be in units. I'll say the amount of FG that will be required. Amount of FG is what is the amount invested, that is, I'll say the cost of production. Cost of production, right, divided by 12 months multiplied by the holding period of FG, multiplied by the holding period of FG. Clear, sir? So this is how the amount of FG will be calculated, multiplied by the holding period of FG. The holding period of FG represents that period when the goods have been manufactured and they have not yet been sold. The goods are lying in your godown, they are not yet sold. Clear? Now, how to calculate the cost of production? Otherwise, in most of the cases, we will be taking the cost of production, right? How to calculate the cost of production? So we'll talk about a little bit about that. I'll write it as calculation of cost of production. Sir, we will do it, sir. We know how to calculate the cost of production, sir. We have already studied cost accounting. Sir, you have already taught there how to do this. No, I'm going to teach you again. I don't believe you guys that you have already studied cost accounting, sir. Sir, this is wrong, sir. Anyhow, material cost. plus labor cost. Right, sir? Simple cost sheet, sir. Very simple cost sheet plus direct expenses. Now, what does these three things combine that lead to prime cost? Right? Add factory overheads. That will lead to factory cost. Sir, we know everything of this, sir. What is this? Plus production admin overheads. Production admin overheads. Right? That is your cost of production now. Cost of production. Right? Now, normally we take cost of production only because when the goods have been manufactured, they are lying in your warehouse, right? And what is the cost that is incurred? That is the cost that is incurred on the manufacturing of that product. Those goods are not yet sold, right? But there will be scenarios when the cost of goods sold will be equal to cost of production, right? How, sir? Add opening stock of FG minus closing stock of FG. Right? From here we get cost of goods sold. Now, sir, can this be equal? Yes. The cost of production can be equal to cost of goods sold, but how, sir? That is dependent upon whether the manufacturing concern, that is the manufacturing firm, is an old firm or a new firm. Sir, what is this? Listen to it very carefully. What I'm saying, there can be two types of firm, right? In the question you might get, one will say it is an old firm, that is it is working since years, and one is the new firm that is into the first year of its operations. Now what happens? Listen to it very carefully. Now this old firm is existing from 1/4 to 31st of March, right? When these firms come here, that is on 31st of March, they say you have to keep a 2 months finished good stock. He says, okay, sir, right? So here, what will be there? Closing stock that is equal to 2 months FG. Yes, sir, it will be there, right? Now, sir, if it is an existing firm, if it is going to keep a stock here, then the same stock it will be having here also. The last year, at the end of the last year, they must have kept the closing stock. So at here also, at the very beginning, one second, at the very beginning here, they will also be having the opening stock of FG, right? Because the last year they were working, the last year also they would have kept the 2 months stock of finished goods at the end of the year. That will be the opening stock of finished goods. Same closing stock of finished goods. In this case, the opening stock of finished goods will be equal to the closing stock of the finished goods. Now, when the opening stock, let's say the opening stock is worth 1 lakh rupees, and we say the closing stock is also worth 1 lakh rupees. So plus opening minus closing, it will cancel out. In this case, the cost of production will be equal to the cost of goods sold, right? So in this case, the cost of production will be equal to cost of goods sold. But if it is a new firm, what will happen in case of a new firm, sir? On 1st of April, they are starting their operations. They have nothing, no stocks, nothing, right? At the end of the year, on 31st of March, they say you have to keep a 2 month stock. 2 month stock of FG you have to keep, right? So there will be a closing stock. Will there be any opening stock here, sir? Will there be any opening stock? Opening stock will be 0. Why, sir? Because it is a new firm which is into the first year of operations. In this case, the cost of production will not be equal to cost of goods sold. And here, preferably, you have to take the cost of production while calculating this value of finished goods. Clear? I hope this much is absolutely clear to you people. Very important. These small points are very, very important, and I bet you that these small points you are not going to get in any of the marathons available, right? That is why these revision sessions I have planned, and I have planned on the revision sessions of only the conceptual part, because these small points, these small concepts you might leave, and in the examination when the question is there, if you have crammed the questions, if you have just focused only and only on the questions, question and not on the concept, you won't be able to apply it. Clear? So this is everything regarding the finished goods. Now, with this, what we have ended is, we have ended the inventory part. We are done with the inventory part. Now, second part that we are going to discuss is the debtors part, sir. The next part that we are going to discuss is regarding the debtors, right? Regarding the debtors. Now, again, the first thing that will be there is one, that is the holding period will be there. Yes, sir. Holding period, or what we call it as debtors collection period. Instead of holding period, it is better to call it as the debtors collection period, right? Debtors collection period. That is during which the sales has been done, but the amount is not yet received from the debtors, right? So debtors collection period, let's say it is 2 months, right? What is the amount invested? What is the amount invested now in the debtors? The amount invested is the cost of sales. The amount invested now is cost of sales. What is cost of sales? You have studied, sir, when you have sold the goods, at that moment, you have incurred every kind of a cost, right? So what is cost of sales? That is cost of, what is cost of sales? That is cost of goods sold plus selling and distribution expenses. Selling and distribution expenses, right? But one thing now, listen to it very carefully. Another area where you people can commit mistake, another important area that you have to be very careful about. Let's say your cost of goods sold, let's say your cost of goods sold is how much? 7,20,000, right? Selling and distribution expenses, selling and distribution expenses is let's say 1,20,000, right? So this is your cost of sales. Cost of sales, that is 8,40,000. Listen to it very carefully now, what I am going to tell you. Sir, this is the total cost that you have incurred. But is this the total cost that is related to the debtors? Why I am asking this? Sir, out of this, it is quite a possibility that some of the sales is on cash, right? And the sum of the sales is on credit, right? Let's say 20% is your cash sale and 80% is your credit sale. This is the total cost of the sales, including the cash sale and the credit sale. So what is the cash sale here? The cash sale is 1,68,000 and the credit sale is 6,72,000. When you are talking about the debtors, what is the amount invested here? The amount invested is cost of credit sales, right? The debtors are not related to the cash sale, so you have to be very careful. If the total cost of the sales is there, you have to take only the part of cost which is related to the credit sales, because the debtors will arise only if there is a credit sale, right? Only and only if there is a credit sale you will have the debtors with you. Clear, sir? So how to calculate the amount of debtors? So from here, how to calculate the amount of debtors? That will be the cost of credit sales, cost of credit sales divided by 12 months multiplied by the debtors collection period, right? So in this case, like, the cost of credit sales will be 6,72,000 divided by 12 multiplied by collection period, that is 2. So the amount of debtors will be 1,12,000. Now Here is one more variation of this formula. What is that another variation? Sometimes you will find in some of the books that instead of the cost of credit sales, what they are taking is the total value of the credit sale. Why? They say the amount invested in the debtors is what is the amount that is to be recovered from the debtors, right? And what is the amount that is to be recovered from the debtors includes the cost plus the profit. So here you can also take the full value of credit sales. Here you can also take the full value of credit sales divided by 12 months multiplied by the debtors collection period. Sir, which one is correct? You can go with any one. Both these things are correct. Both are correct, but preferably what I prefer is the cost of credit sale. The reason is very simple. The logic is very simple that, sir, what is the amount that is invested from your pocket? That is the cost that you have incurred on that. The profit is not something that you have invested from your pocket, right? So it is always preferable to go with the cost of credit sales instead of only the credit sales. That is really important. That is the logical thing, right? But there might be a scenario where it is not possible to calculate the cost of credit sales. In that case, you have to take the credit sales only, right? I have given you both the scenarios, right? That is totally dependent upon you now. So in the current assets, we are done with the debtors. After that, what is there in the current assets is you might be given in the question cash and bank balance, right? Cash and bank balance will be given to you in the question, given in question, sir, right? Another thing that can be there, that is the prepaid expenses can be there. How to calculate it? That the calculation we'll discuss in the current liabilities, right? The calculation will remain same. The only thing is we'll take it in the asset side, right? Then there can be advance to suppliers can be there. Advance to suppliers. So instead of the current liability, that will show up in the current asset, advance to suppliers, right? So with this, the current assets part is done. I hope this is absolutely clear, and if it is clear, hit the like button, and if you have not yet liked the video, please do it and share on all the platforms wherever you are available. You can share it with everyone, sir, right? It is absolutely free of cost. If you are taking the benefit, let your friends also take the benefit, isn't it? No, sir. He might gain some extra marks, isn't it? But that's fine, sir. Whatever happens, that depends upon your attempt, not your friend's attempt, isn't it? Okay, now moving to the current liabilities. What is the current liabilities now? Current liabilities. Okay, under the current liabilities, the first that we have is creditors for raw material. The first that we have is the creditors for raw material. Try to understand it very carefully, because this is again one point which is important. Creditors for raw material. Now again, two things, dependent upon two things. What will be the thing? One is the holding period or the creditors. It is dependent upon the credit period allowed by suppliers. Credit period allowed by suppliers, right? So let's say it is 1 month. It can be 1 month, sir. No issues in that. Right? It is the credit period allowed by the supplier. This is holding period. The second is, what is the amount that is involved? What is the amount that is involved? The amount involved is amount of credit purchases, right? Amount of credit purchases during the year. Clear? So how to calculate the value of creditors? How to calculate the value of creditors here? The value of creditors is amount of credit purchases. Amount of credit purchases, right, divided by 12 months, or if it is in weeks, then 52 weeks or 360 or 365 days multiplied by the credit period. Multiplied by the credit period. This is how you will calculate the value of the creditors. Clear? Sir, is this done? The creditors is done? No. A very important point coming up related to the creditors, sir. Okay, now see, what is that amount of credit purchases? Now, how to calculate the amount of credit purchases? This is interesting. Listen to it very carefully. Sir, the amount of credit purchases will depend upon the type of firm. Amount of credit purchases will depend upon the type of firm. Sir, what is meant by type of firm? The type of firm means whether it is an old firm or whether it is a new firm. Why, sir? Why it is again dependent upon the old and the new firm? Listen to it very carefully. What will happen in case of an old firm? In case of an old firm, what will happen, sir? Let's say 1st of April to 31st of March. This is the whole year. I say in this whole year, the raw material consumption is going to be worth 1,20,000 units. Right? That means you will have to buy the raw material worth 1,20,000. Right? This is going to be your purchases. Correct, sir? Right? So that means from here we can say your purchases should be, from here we can say that your purchases should be 1,20,000. But now the question says you have to keep a 2 months raw material in the stock, raw material holding period. The question says you have to keep here the closing stock of 2 months. You have to keep the raw material equivalent to 2 months, isn't it? The question says, sir, this is what? This is the closing stock. How much of the closing stock will be required, sir? The closing stock required will be 2 months consumption, that is 20,000, right? From the raw material holding period. If the raw material holding period is 2 months, here the credit period is 1 month only. The credit period is, that is the period allowed by the supplier for the payment. Right? Here what I am saying is that the company says the raw material equivalent to 2 months consumption is to be kept in the store. That is the raw material holding period. Right? So at the end of the year, you will have to keep a material equivalent to 2 months. Now, when will you purchase this material? Sir, you will have to purchase it on 31st of March or before 31st of March. In the current period itself, you are going to purchase that material. Isn't it? If you have to keep the material for the next 2 months, when are you going to purchase it? You have to purchase it on this date or before that. So what will be the total purchases here? 1,40,000. Right? This is what? This is going to be the total purchases here. But because it is an existing firm, they must have kept the same 2 months stock here also. So that means there will be the opening stock also, sir. Right? Because it is an existing firm, there will be the opening stock. Like they are keeping it here, they must have kept it at the end of the previous year also. Right? So there will be opening stock of 20,000. 2 months opening stock, sir. The same. So why will you purchase? If you already have 20,000 as the opening stock, why will you purchase it? So you will subtract here the opening stock, that is 20,000. So what will be your purchases? That is equivalent to 1,20,000. Correct? Here your purchases will be equivalent to the raw material consumption during the year, which is simple calculation, right? In this case, your purchases will be equal to, in this case, the purchases will be equal to raw material, will be equal to annual raw material consumption, will be equal to annual raw material consumption, right? Now, coming to the new firm, if it is a new firm, on 1st of April, it is going to start the operations. There is no stock, nothing. There is no opening stock. This is the firm that is going to start the operations at the end of the year, 31st of March. During this period, the RM consumption is same. Let's say the RM consumption is 1,20,000. That means you will have to purchase equivalent to the consumption 1,20,000, sir. Yes. And here they say you have to keep 2 months as stock. This is your closing stock now. Right? So what will be your closing stock here? The closing stock will be 20,000. That is inventory equivalent to 2 months. So your total purchase, you will have to purchase it before 31st of March. Right? So your total purchases in the current period will be 1,40,000. Will there be any opening stock, sir? Sir, the opening stock will be 0 because it is a new firm. So what will be your total purchases? That will be 1,40,000. Right? So the first thing that you have to read in such a question is whether it is a new firm or it is an old firm. Now, while calculating the raw material under the inventory part, when we discussed about this raw material part, in the raw material I told you it is the annual cost of consumption of raw material. Here you have to take how much of the raw material is going to get consumed. Right? Here we are talking about, in case of purchases, we are talking about the raw material that we are going to purchase. So it is dependent upon the old firm and the new firm, sir. I hope this much is absolutely clear. Very, very important part of it, right? Okay. So this lecture is going to be a bit lengthier, okay? So don't worry about it. Because after this, we have to do double shift working also. We have to understand the concept of double shift working also. Okay, so this is all about the debtors, creditors now. Moving to the second part. The second is creditors for expenses. The second is the creditors for expenses. Now the expenses can be what? Expenses can be wages, expenses can be overheads, etc. Right? Now how to calculate the creditors? Is there any investment that is involved here, sir? Is there any investment? Yes, sir. What is the investment here? Amount invested is amount of expenses, amount of wages or overheads, right? Now, what is the period here? The period is the lag in the payment. Period is lag in the payment. What is this lag in the payment? Sir, a worker is working from 1st of April to 30th of April is working in your factory. Right? He has started earning the wages from here itself. Whenever he has started the working, he is earning the wages. You pay him on the next month. That is on 5th of May, you are making him pay. Right? So this is what? This is the lag of 1 month. Lag of 1 month. That is the work that he is doing here. For that, he will be getting the wages in the next month. That is the lag period that is given to you in the question. That is, we make the payment after 1 month. Some people make payment after 15 days. For the labor, right? So in that case, how to calculate the creditors for expenses? Creditors for expenses, that is equal to the annual expenses. Annual expenses, whether it is wages, whether it is overheads, divided by 12 months, multiplied by the lag period. Multiplied by the lag period. Now, if the lag period is not given in the question, if lag period is not given in the question, then you have to assume it that the payment of expenses is done immediately. There is no lag. Then you will not take this creditors for expenses in the statement of working capital. Right? Write down 2 notes regarding this. Note 1. Note number 1. If lag period is not given in question, if lag period is not given in question, then assume that expenses are paid without any lag. Without any lag. So in that case, the creditors for expenses will not be considered in the statement of working capital. Secondly, note 2. Note 2 says that if expenses are paid in advance, if expenses are paid in advance, then prepaid expenses, the calculation will remain same, sir. If he says they are paid 1 month in advance, in that case the period will be 1 month. The annual expenses are going to remain same. Then prepaid expenses will be taken in current assets. Will be taken in current assets. Clear? So these are the two important notes that you have to remember, sir. Clear? So this is all regarding the working capital statement, right? I don't know if I have the statement with me. No. So what is the working capital statement? If I talk about the statement here, sir, what is the working capital statement? Because what you will be asked is to prepare the working capital statement. Working capital statement is very simple, sir. Working capital statement says all the current assets, right? Under the current assets you will take inventory, under the current assets you will take debtors, under the current assets you will take cash, under the current assets you will take any prepaid expenses, right? So you will calculate all the current assets, right, minus all the current liabilities, all the current liabilities, right? So current liabilities will include what? The current liabilities will include the various creditors, whether it is creditors for raw material or whether it is the creditors for this expenses, right? So from here you will get working capital requirement, you will get net working capital, you will get net working capital, and in case the company is keeping something as the safety margin, you will add safety margin. It will be given in the question what is the percentage of safety margin. The safety margin will normally be calculated on the net working capital, right? That gives you the total working capital requirement. Total working capital requirement, sir. Clear? So this is the working capital statement. We have discussed all the small components of this working capital statement, that what are the various components, what are the various things that you have to calculate, and what are the various small points that you have to keep your focus on. Clear? Now coming to the last topic of working capital. What is that last topic, sir? That is double shift working. The last topic is double shift working. Right, sir. I'm not used to such lengthy lectures on the YouTube. If you will see, most of the lectures are 30-40 minutes only. But yes, these are revisionally lectures. We have less of time. So in the less of time, we have to cover more of the things. So what is double shift working, sir? The double shift working says that currently you have been working from 8 a.m. to 6 p.m. Your factory works from 8 a.m. to 6 p.m. This is the single shift, and you are in this single shift, you are manufacturing 10,000 units. Right now, because there is an increased demand for your product, so you are not able to satisfy the whole of demand by manufacturing during the single shift. Now you have decided to go for the double shift. So it is the same scenario. When you are quite far away from the examinations, you are studying from 8 a.m. to 6 p.m. When near the examinations, what will happen, sir? Your study hours will increase, your shift will increase, then you will have another shift from 9 to 3 p.m. 9 p.m. to 3 a.m. Similarly, for the factories, if there is an increased demand of their finished product, what they will do is they decided to go for another shift of the same time. That is, he says the second shift will be from 8 p.m. to 6 a.m. in the morning. Now, what will happen, sir? Earlier, they were able to manufacture only 10,000 units. Now, they will be able to manufacture 10,000 more units. That means their production will double to 20,000 units. Yes, sir. Their production will double to 20,000 units. Right? So number of units of FG will increase. Will increase, definitely, sir. And this will also lead to the requirement of more working capital. this will lead to the working capital will, or the working capital requirement will also increase. Requirement will also increase. Why, sir? Because earlier you were manufacturing 10,000, now you are manufacturing 20,000 units. You will need more of raw material, more of efforts will be there, more of labor will be there, everything will be more. So the investment, the overall investment earlier was on 10,000 units, now it is going to be on the 20,000 units. So obviously the working capital requirement will increase, isn't it? What say? Yes, sir. Let's see what is going to be the impact on working capital. What is the impact on working capital? Impact on working capital, right? Please do this double shift very carefully. I don't know why, but I'm getting a gut feeling that in November 2023 attempt, you might get a question on double shift working. I don't know why, right? But if I'm saying, so please do it carefully. See, don't say this that sir is telling us that you are getting a question on double shift working. No, I'm not a paper setter. I'm saying it's my gut feeling that in November 2023, you might get a question. You might get a question. But I'm using the word, please do not misinterpret it and make the things viral on internet, right? See, this is the biggest, thing of the social media that you have to speak very carefully. That is why I'm clarifying. I'm giving the clarification upfront only. Okay, so let's see what is the impact on the working capital. There are various items of the working capital. The first impact that we'll study is on raw material. Right, what is going to be the impact on raw material? Obviously, sir, if you manufacture the double number of units, the raw material will also be required to the extent of double quantity, right? So I will say the double quantity of raw material will be required. Double quantity of raw material will be required. Right? Double quantity of the raw material will be required. Now, one thing that you can benefit from is that earlier you were buying the raw material for 10,000 kg. Now you will buy the raw material for 20,000 kg. That means you are bulk buying. The supplier might give you discount on the bulk buying. This is the benefit that you can attain. Discount on bulk buying. For example, sir, earlier for 10,000 units, you were getting a raw material that is 20,000 right kg. Now, for additional 10 units, you will require additional 20,000 kg. That is, total requirement will now be 40,000 kg. Now, the supplier says, if you are getting 20,000 kg, I'll give you at the rate of 10 rupees per kg. But if you go for 40,000 kg because you are buying in the bulk, in that case, I'll give you at 9 rupees per kg. So the discount on bulk buying, the per unit cost of the raw material, the quantity will double, but the per unit cost of the raw material might reduce. Right? So what I write here is that per unit cost of raw material might reduce. Clear? This is the impact on the raw material. Let's study the second impact. That is on WIP. What is going to be the impact on WIP? Let's see. The impact on WIP is no change in the WIP units. Why, sir? No change in WIP units. Right? But the WIP, why there is no change in the WIP units? Because the work started in first shift will be completed in second shift. I'll explain you this. Will be completed in second shift. Right? I'll explain you that. Don't worry. After that, one thing I'm saying, the cost per unit of WIP can change. Why, sir? Sir, what is included in the WIP cost? The WIP cost has material cost and labor cost, right? So if earlier the material cost was, let's say, 10 rupees, labor was 5 rupees, now under the double shift, this total 15 rupees is the WIP cost. Now under the double shift, the supplier says, I'll give you for 9 rupees. Now my material cost is 9 rupees, my labor is, let's say, 5 rupees, so my WIP cost will be 14. It can change under the double shift working, but the number of units are going to remain same. Why? Listen to it very carefully. What I'm saying is, I'm working in the first shift, that is from 8 a.m. to 6 p.m., right? During that shift, I'm manufacturing 10,000 units, and 10,000 units are in WIP that I'm going to complete next day. Now, instead of next day, what I have decided is for another shift from 8 p.m. to 6 a.m. Now, what will happen during this shift? During this shift, this WIP, I'll complete this first into FG, right? And another 10,000 will be in WIP. So, is there any change in the number of units of WIP, sir? At any point of time, the WIP units are going to be this 10,000 only. So that is why we say no change in the WIP units, because the work started in the first shift will be completed in the second shift, right? The cost part can change, that I have explained to you, right? So this is the impact on WIP. Let's see the third impact, that is the impact on finished goods. Impact on finished goods. One impact we have already studied. What, sir? The quantity will be doubled, right? The quantity of the number of units of FG will double, right? But the per unit cost of production of FG, the per unit cost of production of FG might decrease due to economies of scale. Economies of scale means the similar thing that for raw material, earlier you were buying in the small quantities at 10 rupees. Now you are buying in the bulk quantity at 9 rupees. You are getting the benefit. This is known as economies of the scale, that you are scaling your business, and due to that you are getting the additional benefit, that is known as economies in terms of RM cost. In terms of RM cost or reduced fixed cost per unit. Reduced fixed cost per unit. Now, what is this? I'll come to that. Clear? Finished goods is clear. Next impact is, now these were the important impacts. Now, the next impact is simple, sir. Debtors. Obviously, sir, if you are manufacturing more, you will be selling more, right? So, in case of debtors, the quantity will double, but the value of debtors will be less than double. It is not necessary that the value will be double. Value will be less than double, right? Because the cost is less, right? The value might be double also, if you want to increase your profit margins, but the value will be less than double normally, because you have reduced cost also, so your selling price also might reduce. After that we have the creditors. The creditors also, for the creditors, what will happen, sir? The quantity will double. Why? Because you need the double of raw material, but the value of creditors will be less than double. Why, sir? Because now the creditors are giving you discount. Earlier they were selling at 10 rupees. Now they are selling at 9 rupees. So they are giving you a discount. Clear? So this is regarding the creditors. Now the last part is regarding, one second. The last, sixth point is regarding the fixed cost. Sir, if there is any fixed cost that is given to you, with the fixed cost, the amount of fixed cost will not change. This is what we have studied about the nature of the fixed cost, that the amount will not change, sir. Amount of fixed cost will not change, but the per unit fixed cost will change. For example, let's take an example to understand it. Sir, what will be the example here? Now, earlier I say you were manufacturing 10,000 units, right? For 10,000 units, your fixed cost, the rent of the building, let's say your rent of the building is 10,000. So what is your fixed cost per unit? That is 1 rupee. That is 10,000 divided by 10,000. Now in double shift working, your number of units will double, right? But I say the total amount of the fixed cost is going to remain same. That is, it is going to remain 10,000 only, right? So what will be the fixed cost per unit here? The fixed cost per unit will be divided by 20,000. This will be 0.5. Your fixed cost per unit will reduce, but your total fixed cost, the amount of the total fixed cost, it is going to remain same only, right? Why I am teaching this fixed cost concept? Because it is there in the illustration number 5 of your ICAI module. Now you can go through with the illustration number 5. There, what they are saying is, listen to it very carefully. What according to that solution is, you have 24,000 units in that and 48,000 units in that, right? What is the material cost? Material cost, he says that in case of 24,000 units, it is 6 rupees, and here it is he is going to give you the discount, after which it comes to 5.4 rupees, right? 60 paisa discount. Now coming to labor cost there, I don't know what exactly is the labor cost, the value of labor cost. For example, he says the labor cost is let's say 6 rupees, right? Out of which, or 5 rupees, let's say it is 5 rupees, out of which he says 80% is fixed and 20% is variable, right? So under this 24,000, what is going to be your total labor cost? It is going to be 5 rupees. But here, when you are doubling the quantity, what will be the labor cost here? Here, if you want to calculate labor cost, how will you calculate? Sir, your variable cost is not going to change. The variable cost, how much at 80? That is 4 rupees and 1 rupee, right? Variable 1 rupee is going to remain same. But the fixed part of it, just I told you that the fixed cost per unit will reduce to half, right? Reduce to 50% with the increased production, with the double production. This fixed cost of 4 rupees, here it will be 2 rupees only, right? So total labor cost will be 3 rupees here. This is what is known as economies of scale. That is why I wrote here, when I talked about the finished goods, due to the economies of scale in terms of RM or reduced fixed cost per unit. This is what is the meaning of the reduced fixed cost here, right? Now on this basis, try to solve the question illustration number 5, right? Try to solve illustration number 5. Now on this basis, the ICAI module illustration number is there, right? So with this, all the concepts of the working capital we have discussed, sir. We are done with it. The double shift working, the amount of working capital, the estimation of working capital is the most important topic, and this lecture from that perspective is very, very, very important. Very important, right? So in the next lecture, what we'll be doing is, in the next lecture, we'll be taking up the cash management, which is comparatively a simpler part of working capital management, right? The cash management is a very, very simpler part. So we'll continue with the cash management in the next lecture. I think in the capsule also I have double shift working. I have already explained to you. Yes, cash management is there. We'll quickly go through with the cash management. There is nothing much as such to be discussed, right? Which is very, very simple. Right, cash management is comparatively simple. We'll be able to cover it up in the one lecture, in one go. Cash management done and dusted, right? And please do hit the like button and tell me in the comment section, how are you finding these videos? This is going to be really helpful for examination. I believe that. What you believe it, let me know in the comment section, right? So see you guys in the next lecture with the next chapter. Till then, stay safe, stay healthy, keep studying, keep sharing. Thank you so much.